The calm after the storm. Hello and welcome to our weekly outlook. We are going to have a calm week after the amazing week that we just passed through. Last week, with central banks meetings, earning reports, and heavy financial data, we had a new record high every day in the Wall Street. Week ahead, economic calendar will be so light, and the market will try to digest the data and event of the last week to stabilize itself. Let's check the most important data and events of the week ahead. Number 1. US producer inflation. After the 6th consecutive all-time high in September, we are waiting to see a little bit of ease in the producer inflation numbers for both headline and core data, to see them unchanged or even at the lower levels. Even thought we can see a bit of cool down in the pace of spreading that is still in a multi-year high. The PPI increasing since the start of 2021, causing increase in the trade price measures and with ongoing supply shortage increasing the inflation indexes. Number 2. US Consumer Price Index. Same as producer inflation, we are waiting to see a bit of decrease in the consumer inflation as well. Expected headline CPI inflation is at 5.9% and core CPI inflation is a bit lower at 4.4% on the annual scale. This week, we have to watch the detailed numbers, especially construction, new and used vehicles, and the service sector inflation. However, October inflation numbers are unlikely to make any changes in our overall inflation outlook. Inflation numbers just will be another reason to increase the US dollar demand and support the bulls. Number 3. GDP and manufacturing activities in UK. Gross domestic product and manufacturing production numbers of United Kingdom will publish on Thursday. GDP, the economy's most important figure, in the third quarter's initial estimates is expected to grow by 1.5% and 6.8% respectively on seasonal and annual scales. On the manufacturing production front, waiting to see a slowdown in September to 0.1% monthly from 0.5% of last month. Both numbers will put the pressure on British pound against its crosses. Finally, number 4. US GLTs. Despite it dipping slightly in August, it's still in historical highs to encourage employees to start looking after better and higher paid jobs. A high quit rate is one of the reasons for the higher job opportunity numbers, as workers are confident they can voluntarily leave their current job and find gainful employment elsewhere. For September also, still expected to stay around the same levels to confirm the ongoing labor shortage issue. However, if in the next months also it stay higher, can alert the path of monetary policy tightening going forward. Thanks for watching this video and hope week ahead will be an amazing and gainful week for you.